You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, first day of September 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. every trading day. And then we take a 30-minute break, and we come back for the afternoon broadcast. Now, the live training room, of course, is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, you can do so by going to mytradingiq.com. Also, on that page, if you scroll down, you'll see afternoon broadcast. If you click that link, you'll get a registration page. It'll take you about 30 seconds to fill out. And then every day going forward, what will happen is right before the afternoon broadcast starts, you'll get an email. In the email will be a link. All you have to do then is just click the link, and you'll automatically be logged in. Now, that's the better way of joining, simply because it gives you access to the question box so that you can ask questions and participate in the discussion. We also simulcast the broadcast live in real time on our YouTube channel, and it's pretty easy to remember, youtube.com/CFRN. youtube.com/CFRN. Got that? Okay. Not only do we broadcast live each day on the YouTube channel, we also archive each and every daily show. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. With that said, let's open with a word of prayer. Matthew 11:28 says, "Come to me, all who labor and are heavy laden, and I will give you rest." As Labor Day approaches, many of us are thinking about rest. Whether it's the new school year starting up, church ministries kicking off, health issues, busy schedules, planning for big life events, or just the hustle and bustle of the regular work week, many of us are eager for an extra day off. The Lord was intentional with giving us a Sabbath day in His creation of the world. He modeled that to the rest of us. On the 7th day, He rested. He also reminds us that He is the one in whom we find rest for our souls. Psalm 62. So how do you need rest today? Is it physical, emotional, spiritual, financial, or all four? The Lord is more than able to handle our weariness. Today, as we come to Him in prayer, may we be reminded that He cares about us and desires for us to have strength from Him. We are human, and we do need rest. Pray with me. Heavenly Father, we are weary, some more than others. We've labored and are heavy laden. We come to You today, knowing that You will give us rest. please give us rest in you. Our troubles, busyness, and hard work weigh us down. We are asking you to meet us in our weaknesses. Thank you that all we have to do is come to you, and you promise that you will give us rest. We know that this does not always mean we will have immediate peace or renewal, but it does mean that you will offer it to us and give us spiritual help in what seems to be an increasingly hard life to live, given all the things that are going on in the world today. In Psalm 23:2, you tell us, you give us your word. It says, He makes me lie down in green pastures. He leads me beside quiet waters. He restores my soul. In any area where you need to make me lie down, help me to humble myself and depend on you. Give me the desire to rest in your pastures and by your quiet waters. You are the one who restores my soul. Where I am spiritually drained from evangelism, serving, or walking the narrow path, please breathe new life into these old dry bones. Give me a sense of newfound strength and joy in following you. Help me to be sensitive to your leading, to your yes and to your no. Guide me each morning by your word and hold me each night as I fall asleep. In Jesus' name we pray. Amen. And everybody said amen. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. The Dow is currently down 103 points. The NASDAQ is down 233 points, which is almost 2%. The S&P 500 is down 35 points, almost 1%. And the Russell 2000 down 40 points, 2.25%. In the commodity basket, crude oil down $2.16, trading 87.39 last. Gold down 16, make that $17, trading 17.0920 last. That's a drop of 1%. Silver down 17 cents, trading 17.70 last. That's a drop of 1%. In the Asian markets at the close, the Nikkei fell 430 points, 1.5%. The Shanghai dropped 17. The Hang Seng fell 357 points, which is 1.75%. And in the European markets at the close, FTSE down 135, almost 2%. The DAX down 204, over 1.5%. And the CAC down 90, 1.5%. So that gives us a red day in Asia, a red day in the UK, and it's a big red Radio Thursday here in the US of A. So with that, we'll go to Michael, get a recap of what happened this morning in the live training room. After that, I'll be back. We'll look at the logic alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, all you got to do is type it in the question box. We'll be happy to answer it for you.
All right. Have I taken the charts yet?
Yep.
I have.
I can
Good.
see your charts.
Okay.
You're ready to go.
Here we go. All right. Good afternoon, everyone. Today is Thursday, the first day of September, 2022. All right. So if you've not taken a free trial with us, go here to mytradingiq.com. Right here on this page. You can click on this link right here. It says grab a seat here for 5 days of training and trading. When you do that, you'll be sent all the information that you need to get set up for the room in the morning. Now, the room runs 9:30 to 11:30. a.m. Eastern Time. Before you get into the room, though, you should look at all of these things. You should download the platform, whatever platform is appropriate to you. Download it. If you don't have a platform yet, choose one. I would say probably choose DT Pro, DT Pro or TradingView, but probably DT Pro if you want yours to look exactly like mine. Look at the trade handout. It's got the rules. It's pretty easy. One sheet. Look at the rules and watch some of these videos to familiarize yourself with what you're going to be seeing in the training. All right. Now the spreadsheet, it is the first day of the month, so we really don't have a lot to go over here on the spreadsheet, but if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the first day of September 2022, made 25 ticks in crude, 14 ticks in gold, and 53 ticks on the ES. Put us at 1,052 on the morning session. Today it took 19 minutes and 7 trades. It was actually less than that, but that's where I ended up. I lost track, and it ended up being 19 minutes and 7 trades to get to $100 a contract, and we took a total of 38 trades because we got to 100, then we dropped back from 100, then we got back to 100. Is what happened. So the first day of the month, we're averaging $1,052 per day this month. I've now gone 167 out of 167 days getting the goal so far this year, and 228 consecutive business days since my last negative day. On the year, that puts us at $173,318 with one contract, averaging $1,037 per contract per 2-hour business day. If you were, I gotta fix these numbers, the formulas anyway, but if you were to quit trading when you got your goal for the day, and your goal was just $100 profit per contract, and you were to add one contract per month, you'd now be at 9 contracts. Okay, and one contract per month, you would have had to work 28.18 hours so far this year. And we are now, well, we're now in our 9th month of the year, so we've now completed 8 months this year. 28 hours worth of work in 8 months, and you would have averaged $3,650 per hour for those 28 hours. And I know, seems like a lot, and it is, but you can do it too. All right. So let's get into what we did. Now we had to take a little bit of time off on the crude oil today because my charts were not keeping up. So we had to take a little bit of time off on that, but it's okay. We got back to it once we got into it. We missed this first trade here on gold. This was the actual first trade. It was one that set up right here. We could have taken it was red off of red. I missed that one too. There was some news that came out, I think, at the top of the hour. But I did take this short right in here. This was actually a blue down close on the trend line. I had the order on. I was waiting for that bar to turn red, and it didn't turn red. But it triggered me in anyway, and I took 10 ticks profit on that. Then on this one, I had, let's see, I went from 10 to break even, then to 0, then to minus 10, because I stopped out twice in a row right there. So I ended up going from plus 10 to minus 10. And then I picked up 4 ticks, and that got me 3 ticks, sorry, got me to minus 7. Then I picked up 16 ticks right there. That got me to plus 9, and then 5 ticks right there. So somewhere in here, there was a 4-tick trade. I think it was right in here. Might have been there. I don't know. But anyway, we ended up with plus 14 on gold on the morning session. Now, toward the end of the session this morning, I did a moment in time, and nothing really panned out the way that I thought it was gonna. We didn't really have anything to go on either at the time. This was, I put the line 1 minute, 1 bar after the current bar at the moment in time. So this is what it looked like during the moment in time on this bar right here. And so the slingshot was not giving us what we were looking for. It was just showing it might go up to this level right here, but it didn't. It turned around and went right back down. Since then, there was 1 blue off of blue right here that you could have taken. And it looks like 1 trend line trade right in here you could have taken. Okay, so 2 trades you could have taken since then during the break. On the crude oil, I told you we had to take a break during the crude, all during this period right here. All right, so it started off and the crude was off to begin with. So I couldn't trade it right there. And then we finally did take a trade here. Our first trade on crude was right here. We picked up 25 ticks on that. Missed a trade there. Then right here, we missed a trade. Then we grabbed 4 ticks to get us to 29. a break even, then 9 ticks to get us to 38, then a stop out and got us down to 28, and another stop out got us down to 18. Then we went from 18 up to 24, so we had 6 ticks, and went from 24 to 30, so we had another 6 ticks. Then looks like we had a break even, and a stop out that got us down to 20. We had a red off a red right there that I missed. And then in here was our moment in time. This was toward the end of the session. There was another one in here where I picked up 5 ticks somewhere. I think it was right in here. I picked up 5 ticks after the moment in time was done. I'm not sure. No, the moment in time finished right over here. So I don't know where it was, but I picked up 5 more ticks somewhere to get us to plus 25 on the crude. But the moment in time I was saying, if it goes up and it, it already should have been a triggered in trade right here. It should have been blue off of blue from right here. And stop should have been a break even or taking profit already. If it was going to go up, I was expecting it to get up to this level. And if it goes down, I was expecting it to get down here to 83 was the number I was looking at on the downside. So it ended up going down from there and it got down to the 83 number. And since then, you can see it's gotten up to the upper number as well. All that was from the big picture stuff. And I'll go over that on the ES in a minute here. But during the break, just red off a red and blue off a blue. There was a blue right there, a blue right there, a red right there. And that was it for the reds and blues. Okay. So we ended up with plus 25 there. Now the ES, we had a bunch of trades on the ES this morning. Right, on the ES, this is what I was thinking it was going to do. If it pulled back and bounced up, this is where I was thinking it was going to go. It did eventually go up there. It just took a little while to get there. That was our moment in time at the end of the session this morning. But we ended up in here trading a bunch of the ES because we couldn't do crude oil and gold just wasn't giving a lot of trades. But our first trade on the ES was right here. We picked up a couple of ticks on that. The next one was right there. We got 3 more that got us to plus 5. Then we stopped out, put us at minus 5. Then we had 14 ticks, something like that, to get us to plus 9. Okay, so that'd be 9 plus 5. Yeah, 14 ticks to get us to plus 9. That right there is where we actually had the goal for the day. But for some reason, I was thinking we needed plus 10, but really plus 8 is all we needed. But anyway, we stopped that on the next trade, and that put us back down to minus 1. All right, then we had a break even there, and we had a plus 9 right there to get us to 8, and that's where I marked down the goal for the day was right there. So it was actually 3 trades less and 10 minutes less than what I wrote down. But either way, it went from plus 8 to plus 13 right there. Then from plus 13, we stopped out somewhere. It looks like I didn't write down a couple of things because I have 13 to 3, so we stopped out. Then went from 3 to 11, so that was a plus 8. And then from 11 to 17, so that was a plus 6. So there's a couple of trades missing in here that were positive trades, an 8 and a 6, so 14 ticks. But we did have the stop out right here, and that got us down to plus 3. And then then we picked up 8 ticks to get us back to 11, then 6 ticks to get us back to 17 right there. And then from 17, we went to 25. And from 25, we went to 37. This looks like the 25 to 37 trade right here. And then we had a break even, and then 37 to 41. So it was 4 ticks, then 41 to 49, so 8 ticks. Then a break even, then 49 to 53. Looks like I had a couple other trades that I didn't mark down. 49 to 53 was right there, so that was 5 ticks. There was one right here that I didn't mark down. And then this was the moment in time. In the moment in time, I thought it was going to go down and then go up. In this case, it just kept going down. Now, the slingshot wasn't giving us anything, so I was just going by what the DOM was giving us. All right. And the DOM was suggesting on the 30-minute, at the moment in time, it was 11:16. So it was in this candle right here, this candle right here, that it was suggesting it was going to get up here to the BBC. And that's exactly what it did. It went up to the BBC. And then I was saying after the BBC, we should see it move back down to this level right here. You can see it's already done that, and it's bounced off of this level right here. So that was the big picture stuff that I was looking for. I was looking for it to get up to here and then down to here and then give a little bounce. And that's what it's doing right now. Okay. Now, during the break, it was blue off of blue, blue off of blue. And that was it, just a couple of them. All right, so we ended with plus 53. It was actually more like 70 altogether on the ES, but 53 is what I wrote down, so I'm sticking with that. Let me look at who all is in here. Okay. All right. Partners meeting tonight, 9 p.m. Eastern time. Just a reminder to everyone. Okay, you must be a partner to get into the meeting. If you're not a partner and you want to become a partner, send us something at support@mytradingiq.com and just put partner info in the subject line. Okay. Now, the spreadsheet, if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the first day of September 2022. 25 ticks in crude, 14 ticks in gold, 53 ticks on the ES. Put us at 1,052 in the morning session. Today, it took 19 minutes and 7 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 38 trades this morning. Right, 38, we took a bunch of trades. We actually took more than that, probably like 42 or 43 in all those winners that I didn't count. Anyway, that puts us at 1,052 on the month. It is the first day of the month. We've gone 167 days so far this year, every day so far this year, getting our goal. And we've gone 228 days since our last negative day. So we're getting up on a total year now of business days since our last negative day. So on the year now, that puts us at $173,318, averaging $1,037 per contract per 2-hour business day. Okay, if you were to add 1 contract per month, and when you get your goal for the day, and your goal was only $100 per contract per day profit, then so far this year you would have only had to work 28.18 hours, and you would have averaged $3,650 per hour for all those hours. But most days would not be a full hour. As a matter of fact, I think I've only worked 1 or 2 days so far this year that were a full hour. And you would have grossed $102,877 so far in those 28 hours of work. So that's a half week's work, almost 3/4 week's work for $102,000. Not bad if you can get it. All right, and that's it. With that, I'm going to go back here. If you've not taken a free trial with us and you want to, go to mytradingiq.com. Right here, it says grab a seat for 5 days of trading and training. Click that, and you'll be sent to everything you need to get into the live training room. The live training room is 9:30 to 11:30 a.m. Eastern time every business day. All right, I don't think we missed a business day in a very long time.
And we will be closed on Monday.
Yes, we will be closed on Monday. And I don't think we've ever really actually missed a business day. We've had business days where we didn't run because of holidays and stuff. But I don't think we've ever actually missed a business day where we just didn't show up. Anyway, if you're gonna take the free trial, go here into the platforms, download one of the platforms, let us know what you downloaded so we can make sure you're all set up. It is great benefit to you if you get the platform loaded on your desktop while you're doing the trial. Read the trade handout, watch some of the videos so you can see what to expect. Okay, that's all that you need to do, all that you should do whenever you want to take a trial with us. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, you are ready, I think.
Yep, I'm ready.
Okay. All right.
Okay, recap of the recap.
Today it took 19 minutes and 7 trades to get to $100 per contract.
Good job.
Thank you.
Okay, guys. Logic 247. It's our 24/7 around-the-clock E-mini alert service, which also includes not just the E-minis, crude, gold, silver, the euro, and bonds. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 46 alerts. 4 never triggered. Still waiting the outcome of 3. We've had 39 actionable alerts, of which 4 or 10% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. Now, the logic alerts can come out at any time, 2 a.m. or 2 p.m. We have traders around the world. Our day session is their night session, and vice versa. Our original alert service, the concierge trade alerts, they're based not on current price action, but on historic price action. And when historic price action meets current price action, that is where you'll find some of your highest probability, low-risk trade opportunities. Market was pretty quiet last night. The alerts usually come out shortly after the Globex Open. I posted them a little later than normal last night, 8:40 p.m. Eastern. I was working on an article for bar charts. So anyway, that's when they came out, 8:40 p.m. There's 2 numbers for each market. This is a static report. The numbers are good for the entire session. Once an alert triggers, logic or concierge, there is a greater probability of it triggering multiple times than not triggering multiple times. So what you do is when the report is posted, you look at the markets you trade and you see where price is at that point in time. Because moving forward, if price starts trending up towards 39.94, that's bullish. Our strategy will look for opportunities to be long the market. And you can simply draw a line in the sand at 39.94. You'll see it on my charts when we go to them in a few minutes. If price starts trending down towards 39.26, that's bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every single day. To yourself, find opportunities to be long or short the market based upon what the chart is telling you. Our goal is to get you to the point where you don't need anybody to tell you when to get in and when to get out. You should be able to look at the chart, read it like a newspaper or a mystery novel, and everything we do is based on logic. And the more logical it becomes, it actually just turns into common sense. Market can only do one of 3 things: go up, go down, struggle sideways for a while. It spends most of its time going up and going down. And so the weekly trading zones serve as your fixed support and resistance, which we've published since December 14th of 2009. And the indicators serve as your dynamic support and resistance. Everything we teach, all of our indicators, are fluid across all markets, all time frames. Not just the futures markets, but stocks, crypto, and Forex. And nothing changes. The strategy is the same because the underlying principle upon which markets operate is the same since the inception of the markets, and will be the underlying principle until the day the markets cease to exist. No matter what market and no matter what time frame, price flows from support to resistance, back to support, back to resistance, over and over. Again and again, it is a never-ending cycle. And so the indicators in real time show you where to expect resistance. Market structure shows you where to expect resistance and support. Same with the indicators. So it's so important that you learn to read the chart so that you understand why price stopped moving at a certain point, either up or down. Those combined with the weekly trading zones, once you understand how price operates around them, it'll become one of the most valuable tools you have in your trading toolbox. So, If you want to grab a screenshot, you can. We'll walk through each one of these markets real quick. We cover the same markets with Logic 247 as we do with the CTAs, the S&P, the Dow, the Russell, crude oil, the NQ, gold, silver, the euro, and the 30-year bonds. So let's pull this out of the way, and we'll go to where we always go at this time of the day, to the daily chart. Institutional traders, the hedge funds of the world, the Goldman Sachs of the world, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts and 5-minute charts and tick charts and range charts. So whatever market you trade, you could do yourself a huge favor by taking a look at where price is in relation to the BBC in areas like this bullish cross, in areas like this 24% reverse fib, where price is unfolding and following the script, and we've talked about it for about 3 weeks now. We know where our next target / obstacle is. Okay. Once we break that 24% fib, now this bullish cross, along with the 24% reverse fib, should give us a pretty nice bounce. Okay. But when that bounce is over, we've already had a bearish cross, so we got red and falling overhead. This old trend line is here, potential support. Then we got potential support across these lows. And then the big one is the low put in on June 17th at 36.39. Resistance overhead is the step line, the 38% reverse fib, red and falling, the daily BBC, the 50% reverse fib, this swing high right here, the 62% reverse fib, and this little swing high right here, which tried to take out these previous two, and it did by a couple ticks, but we're always very suspicious when that happens, and that failure right there has led to this. First, we were anticipating a move to the 38, and we got it, and we got a pretty decent bounce off of it. Then we broke it, and now we're headed for the 24. Okay. So that's it on the daily chart. S&P. $30-minute chart. Okay. Now these are the numbers you were just looking at. CTA long, CTA short. Okay. Now here's where the market opened. As price, you've got red and falling, you're below the BBC, so all you should be thinking about is short trades, all the way down to the weekly trading zone, where the market, oh, that's the NQ. I clicked the wrong one. But we'll just go ahead and do the NQ now, since we're on it. Huge drop from the open, 12,284, down to 12,126. What is that? 284. It's 158 points at $20 a point. It's over a $3,000 per contract move. From the open to the weekly zone, which we expect to be good support until proven otherwise. And it was, just like yesterday when price tried to reach up, the zone served as resistance, but price wanted to touch that BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Stands for bull bear cross. When price crosses below it, we're bearish, anticipating lower prices. And when price crosses above it, we're bullish, anticipating higher prices. Here, this was just a little head fake. From 12,149, which was the CTA short trigger. We went right to the target. So that's some pretty simple math. 49 minus 26. It's 23 points at $20 a point, $460 per contract traded. Then price got back above the trigger. Remember, once it alert triggers, the greater probability of it triggering multiple times than not triggering multiple times. Now, not all triggers are created equal. This trigger here did go right down to the target, but there was blue and climbing in the picture. And so you should avoid that. Once price got below blue and climbing, you could have shorted it, but you didn't have a lot of room to work with. And the NQ tends to be very volatile. So price pulls back to the BBC. The pullback holds more often than it doesn't. And then down we come again, and then right here we have red and falling. And so we have another $450 move, $460 move from the published entry to the published target. And then another $460 move from the published entry to the published target. And then another $460 move, followed by another $460 move. 1, 2, 3, 4, 5. 5 $460 moves from the published entry to the published target. Now we have finally support, support, support. We finally broke the support. Okay. Now on this drop right here from 149 down to $140. That's $180 per contract traded right there. All right, now we'll go to the ES where I was headed originally. Here's where price opened. Same scenario. Price is below the BBC. You got red and falling. You should only be looking for shorting opportunities. Price got to the weekly zone, consolidated, reached down, triggered 39.26, which took us to the initial target at 39.24. And then price just continued to consolidate most of the night right at the weekly zone. Only 3 things happen at a weekly zone. The most common, 70-75% of the time, is consolidation. The second most likely is rejection. And rejection is simply when the 30-minute candle closes, the only thing left touching the zone is the wick. And then the third and least likely is the slice. That's where price slices through a zone like it's not even there. This is not a good example of a slice because we had all this consolidation and congestion right before it. And so price comes down on this first move. There was 2 points. You had blue and climbing here, so you want to stay away from that. Then we go back to red and falling, and from 39.26 we trade down to 39.21. That's 5 points, $50 a point, $250 per contract traded. Then we got back above the trigger, and down we come again to 39.21. This one was 39.21, and this one was 39.21. And then we get back above the trigger, and we come down to 39.22 and a quarter. Call it 23, 3 points there. Now on this drop we made it to 39.23 again. On this drop we made it all the way down to 39.09. 17 points at $50 a point. $850 per contract traded. And then price went right back above the trigger. And this time it dropped to 39.03 and a half. So we'll call it 39.04. So that's 22 points at $50 a point. $1,100 per contract traded. So you had an $850 per contract move followed by an $1,100 per contract move. And then price got back above the trigger. And the current low come on, 39.12. So that's 14 points at $50 a point. That's $700 per contract traded. Now what I've shown you with the NQ and the ES so far, that's more than enough to pay for your passport, which is for life. It never expires. There's no upsells. There's no gotchas. There's no new shiny objects to buy every other week. We refuse to insult your intelligence that way. On the Dow. Came down to the trigger, got rejected, and then here at 31,365, we had blue and climbing in the picture, so not really a trade you want to take. It stumbled across the line to 31,354. Then we got back above the trigger. Now we got red and falling, and so the next trigger takes us to the target at 31,325 / 31,330. So that's 35 points at $5 a point. So over $150 per contract traded. And then we get back above the trigger and do it again. Then we get back above the trigger and do it again. Then we get back above the trigger and do it again. And it looks like we may be getting ready to do it again. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. The reason important prices, important areas are almost always tested. On the Russell, 1829. This first little move only took us down to 28.20. Basically, price was rejected there. And we had blue and climbing, and then finally red and falling came back into the picture. And we had a drop to 1825. That's 4 points, $50 a point, $200 per contract traded. Back above the trigger. Now we go again. This time to 1826, 3 points, $50 a point, $150 per contract traded. Now right here on this trigger, you've got blue and climbing. So that represents potential support. Now as we could see, once price got below there and took out these lows right here, once you understand the methodology and strategy, remember, we want to get you to the point where you don't need somebody to tell you when to get in and when to get out. You should be able to look at the chart and understand that yourself. Once established support is broken, hang on. There's a ride coming. And you'll notice on each one of these pullbacks, we pull up to the zone, find resistance, pull up to the zone, find resistance. We already covered the NQ. So we'll go to crude oil. Okay, the trigger was 88.15. And the first drop took us down to 87.90. $225, $250 per contract traded. Then back above the trigger, and this time we drop to 87, from 88.15 to 87.15. We actually dropped to 87.12. But from 88.15 to 87.15, that 30-minute candle right there, that's $1,000 per contract traded. And we got back above the trigger. So got red and falling. And we dropped another $1,000 per contract traded. And then we get back above the trigger. And on this drop, we dropped to 87.60. That's $550 per contract traded. Then blue and climbing showed up. So you got to wait for price to get below that. If it does, because you have to anticipate it's going to be support. Once you see that it's not holding as support, then that opens the door. And we get back above the trigger, and that little blue and climbing turned to red and falling. And we went from 88.15 down to a low at 86.37. 88.15. Minus 86.37. $1,780 per contract traded. And we've not yet hit the target. We've come very close. We're pulling up to red and falling, which could, just as it did here, was good resistance. Here was good resistance. No reason not to expect it to be good resistance again until proven otherwise. If it's able to overcome red and falling and overcome that swing high and that swing high, then you expect the 30-minute BBC to be resistance, which will then give you another trade to the downside. On gold. We already did the Russell, right? Yeah, we did the Russell. Gold. 17.15 was a trigger. The first drop was 17.13. That's $200 per contract traded. Got back above the trigger and dropped to 17.14. It's $100 per contract traded. And we got back above the trigger. Blue and climbing was in the picture. Once price is below blue and climbing, if you took that, and I would be very cautious. When blue and climbing shows up, you have to expect it to be support until proven otherwise. Okay, but we did get a drop that dropped all the way to 17.12, $300 per contract traded. And then red and falling shows back up, which is what we want to see on a short. And we made it down $400 per contract traded. And then we pulled back up to the trigger, which is 17.15. But we only made it to 17.14.90. So we didn't get official trigger there. But again, once you understand the methodology and the strategy, no reason you couldn't still have taken this trip all the way down to the trade to target. See how the market found support at the weekly zone? See yesterday how price found resistance at the weekly zone? First support, then resistance. These zones went out Monday morning, 6:15 a.m. Eastern. We've published them for our members since December 14th of 2009. If you were short this move down and did not know to expect support here, well, you handed back a lot of whatever you earned, but you didn't have to, because all of our traders knew that this was most likely going to be support. And in fact, it was. As a passport holder, of course, you have access to all that too. The logic, the concierge, the live training room every morning, unlimited one-on-one mentoring, around-the-clock support. I don't know what else a trader could want or need. And it's all done in a family-friendly environment. In our members discussion group, everyone encourages each other. Everyone helps one another. It's not like your typical online trading forum where everybody's angry and bitter because they've been lied to and they're not making any money. The only way you'll find out is to come join up. We encourage you to engage with our members during your 1-week free trial, because we don't think of you, if you become a CFRN passport holder, we don't think of you as a customer or a client. We think of you as family. We're an online community, but more family than community. So it looks like we'll get another drop here. Got to get below red and falling. Got potential support there. And then a nice window of opportunity from 1702 down to the zone at 1701. It's worth $100. Another $100 window of opportunity right here. Okay, silver, we're on the Z contract now. And notice how prices just consolidated across the weekly zone. Here's where we opened last night. Tons of room. I mean, when price is below the VBC and you have red and falling in the picture, you know price is trying to get to the zone below. Price is always trying to get to a weekly trading zone. If it's above the 30-minute BBC, it's trying to get to the zone above. If it's below the 30-minute BBC, it's trying to get to the zone below. That alone is, that knowledge right there is worth the price of admission. So 58 was the number, and we triggered, and what do we drop to? 56, that's $100, back above the trigger, and then we drop from 58 to 54, that's $200 per contract traded. Another 200, and another 200, and another 200, and another 200. And then a little over 100, and a little over 100, and then another 200. And it looks like we may work our way back below the BBC, making this just a head fake. And we may make that $200 trip again. Now we spiked it. And we spiked this thing all the way down to 1740. And that's 13 pennies. That's $650 per contract traded. But for the purpose of the recap, I'm just talking about from the published entry to the published target. The more familiar you become with the strategy, you'll learn how to stay in trades like this. Because you'll have your trigger chart, your smaller time frame, whether it's 5 minutes or a tick chart or a range chart, whatever you've become comfortable with. But this will be your guiding light, your roadmap, if you will. And it will tell you whether you should stay in a trade or not. The euro. Here's where the market opened, right at a weekly zone. And once we got below the BBC, it's heading for the zone below. The trigger was at 245, and we triggered down to 190. Then we got back above the trigger. Notice this bearish cross became this resistance. Bullish cross. became support. A bullish cross that leads to an extended move, the first time price revisits that area, expected to be support. And it was. Bearish cross, first time price revisits that area, expected to be resistance. And it was. So we dropped to the target at 135. And then all you had to do was simply stay in the trade. Because you've got price, the step line, and red and falling. And it took you right down to the next weekly trading zone at 99,290, which gave the market a bounce. And now it looks like we may come back down to test that weekly trading zone again. And of course, as a passport holder, you get those weekly trading zones every Monday morning at 6:15 a.m. Eastern. 9 out of 10 traders fail for 3 reasons. The main reason is they don't have somebody to teach them how to trade. Well, I watch YouTube videos. That's not the same as having a living, breathing teacher that you can ask questions live in real time. 9 out of 10 traders don't have a business plan. 9 out of 10 traders don't have a trading plan. That sounds like work. I just want to click the mouse and make some money. Well, how's that working? Probably not so good. Which is why you're here. No, Hal, I didn't. My bond chart got closed. The CTA on the bonds last night. You've got a chart set up. And you've got the CTAs. So you can look and see what happened. I just don't want to take the time right now to put the chart back together. Somehow when I saved it, all of my drawing objects. Okay. Yeah, because mostly I do the bonds for you, because I don't think we have a lot of other bond traders other than you. But I'll have the chart put back together for the workshop tonight. Okay, so that brings us to our good word for the day. Yesterday we posed the question, has your love for God grown cold? Today, we're going to talk about a simple fact. You can't change other people. You can change, but you can't change other people. Proverbs 13:12 teaches us this. Hope deferred makes the heart sick. You say, surely a man or woman can change when they meet the right partner. No, only God can change people, and you're not God. Plus, when you need to be needed, it can cause you to make disastrous relationship choices in life. Perhaps you've heard stories of people who have experienced massive change through their marriage. But the truth is, the power to change must come from within the person themselves, not from you. When you try to change your spouse, it doesn't work, and eventually your hope for change makes you sick. The Bible tells us that deferred hope makes us heart sick. When you keep longing for and envisioning something that never materializes, your heart is torn with disappointment. Then you start making excuses for what's not working in the relationship, even as it becomes obvious to those around you. Sound relationship decisions are not based on hope alone, especially hope that is blind to red flag behavior. People of faith often try to spiritualize every issue. In the name of faith, they downplay their instincts and ignore their sense of unease. That is not having faith in God. Faith in God should be just that, faith in God. We must not place our faith in fallible men and women, because ultimately, at some point, they will fail us. God gives each of us a free will, but He doesn't force us to change. Change must come from within each of us as we accept the grace that God extends to us each day. Acts 16:14. The Lord opened Lydia's heart to heed the things spoken by Paul. See, Paul spoke the words, but it was God who opened Lydia's heart. You should read that. You should read the whole book of Acts. It's the birth of the church. Here is a better option. Pray for them and let God change them. You work on changing yourself. And that's our good word for the day. You're very welcome, Rachel. You're always so nice. All right, guys, thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. And members, I'll see you tonight, 9 p.m. Eastern. Oh, and for those of you who've been on the trial and want to be in that meeting tonight, you get your passport right here, eminifuturestrading.com. If you have questions, call Valerie, 949-42-EMINI, or send an email to support@cfrn.net.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.